I'm broke, guys. I'm even more broke than last week. I mean, I just dropped below 30% gains today. And this number right here, $55,774, this right here is with me putting an extra $1,000, I think Monday or Tuesday. So if it went for that, I'd be down to 54,000. Like, we are, yeah, if you thought I was broke Sunday when I made that last video, yeah, I'm even broker now. It is insane, man. Like, take a look at the Russell, for example. Like 5% down over the past 6 months. Like, these are the small cap, 1.2% down today. That means things are a lot worse in a lot of your favorite stocks right now. And forget Gevo and Hyliion, which of course is most definitely getting crushed. Like, all my stocks are getting crushed. I'm losing like 500 to 600 per day. And we're going to talk about, you know, the news that sort of caused it, you know, among other things, later on. But, like, we're talking, like, Tapestry had, now, I haven't gone through everything as far as Tapestry's earnings, but on an initial look-see, Tapestry had great earnings, but we're down 3.1%. We dropped below 200% gains, which, god dang, man. AT&T, we dropped a, you know, 5% loss. Revolve, like, it's up today, but, I mean, Revolve dropped, like, from $70 on fantastic earnings. Like, good night, man. Like, none, like, this is, like, the opposite of last year. Remember last year when stocks just went up for no reason? Well, we'll get into that later, but remember when stock just went up with the terrible economy, but stock just kept going up? Like, this is the opposite of this right now. Like, there's just no, like, there's just no bottom to these stocks. Like FedEx, we dropped down to below $270 in that. Oh my gosh. So I'm sure you read this news yesterday, and this is what caused the latest big crash. Is that yesterday? Now, this is something that we knew was going to happen eventually. With all this inflation, you know, running rampant, we knew this was going to happen eventually. But yesterday, the Fed stated that it could begin to reduce the pace of its asset purchases by the end of this year. If you're wondering why the market was doing so well last year, you know, in spite of the economy being in a shitter, well, it was in part due to the Fed's stimulus, which was its asset purchases, which benefited a lot of SPAC companies and a lot of pre-cash flow tech companies. And now, I mean, you know, with inflation running rampant, I mean, we knew it was coming. Now the, you know, Fed is finally starting to pull back, which means that soon after that, it might start raising the interest rates back up. So on one hand, the fact that the Fed is deciding to do this means that the economy has gotten, you know, better, at least to the point where the Fed no longer thinks it's necessary, because, you know, the Fed pumping all that money into the economy, you know, month in and month out since last year. I mean, I'm not a financial expert. I'm not even really good at this, but from what I read, that might have been a cause of the inflation we're seeing now. So on one hand, the fact that the Fed is doing this means the economy is on the upswing. But on the downswing, it does mean that, you know, a lot of our favorite, you know, tech stocks, especially the pre-cash flow tech stocks, or maybe, you know, pre-cash flow non-tech stocks, you know, things that trade on the NASDAQ, they might suffer down the road, like, and suffer a lot as far as their stock price. So what I'm trying to say is, down the road, like, you think these stock prices have fallen now? Now, I am not a financial advisor, like I said earlier, but, you know, I do watch a lot of Tom Nash, and one thing that he said that might make that, you know, makes a lot of sense to me is that, you know, once these asset purchases are tapering, like I said earlier, like Gevo and Hyliion, like, you think these stock prices are down now, like, this could get a lot worse in the future, in the short term. Now, there is one reason I'm bringing this up, and it's that, you know, I've talked my fair share of shit about Gevo and Hyliion, despite me being bullish on the long term about both of them. And there are reasons down the road in which I would consider cutting my losses on both these positions. But the stock price by itself is not one of those reasons. I personally don't care if Gevo falls to $4 or $3 in the short term. I personally don't care if Hyliion falls to $7 or $6 in the short term. I don't care at all. As a matter of fact, I sold a put on Gevo for $5, which, you know, I'm probably going to get it signed within the next couple of days. But I sold a put on Gevo for $5, and that does mean that when I get it signed, when I buy that, you know, when I buy my 200 shares, it will be for $5 instead of the price it's going to be. But, you know, them's the breaks. And not only that, I am considering, you know, buying, or not buying, but selling some puts on Hyliion, maybe for $6.25 or something like that. You know, something that expires in September to make a little cash on the side while, you know, I lose more and more money unrealized on both of these stocks. But even if I don't sell a put on Hyliion, I am considering, you know, buying a little more heavily. I know I said in my last couple of videos on Hyliion that I wouldn't unless I saw revenue. But if the price keeps dropping, like, I might have to go in. Like, I don't think I'd be able to say no if the price keeps dropping like this. So yeah, I might be wrong. Tom Nash might be wrong. You know, when or if the Fed starts tapering their asset purchases later this year, you know, it might not have any effect on, you know, the stock market. But in my, you know, fully non-professional opinion, it probably will. So this is, you know, if you're a long-term on Gevo or Hyliion or any of the other, you know, retail stocks, especially the smaller cap stocks, especially the smaller caps tech stocks, and you're diamond handsing it, well, this is your diamond hands test, because it is my opinion that these stock prices are just going to get worse over the next couple of months. Now, if I'm completely wrong and the stock price shoots up from here and this is the bottom, well, you know, I'll be a happy camper. You know, I'll be happy to be wrong, but I'm just trying to prepare for myself for the worst and, you know, capitalize on the worst in the long term. So if both those stocks drop, not just Gevo and Hyliion, you know, any of those stocks drop below my cost basis in the future, like Walgreens, yeah, I'm going to go in on that. As a matter of fact, I bought some Verizon today when it dropped below. But anyways, if you're diamond handsing, just stay strong. And for a long-term investor, the stock price by itself should not affect your decision on whether you should or should not sell a stock. But anyways, take care, have a great day, and eat your vegetables.